Welcome to today's training. So today we are going to be focusing on Forex. Okay, you're all welcome. So before I begin, I want to quickly remind us that this is just a kind of summary of what we have. Okay, the videos we have that have sent to us. I just want to use this one as a summary in order to summarize what is in the video so that it will be easy for us to understand how to analyze a chart on our own. Okay, I might not be going in depth because of time, because of it is not something that we can cover for in a single video. Okay, so I just want to give us a summary, okay, for us to understand, have better information on how to trade so that by the time we open up a chart, a trading chart, we will not get confused. Okay, that's basically the main reason for this training. So so before we do anything, of course, we make use of trading view. So you go to www.tradingview.com. Okay, when you go to tradingview.com, the next thing is to register. Okay, the next thing is to register. When you register, okay, you can of course you click on get started. Click on get started, you register. Okay, when you register, of course you have your own um, password and all that, email confirm and everything, and you are in. So the while we are using TradingView, like I've mentioned before, is very flexible. You can use it to maneuver your analysis. Okay, you can use it to maneuver your analysis, your trading analysis. Okay, very flexible. You can see free until you are ready. You can see it is written there boldly. These are their plans. Okay, if you when you're ready to buy or subscribe to any of this plan, then you can go ahead. But if not, it is free for you to use. Okay, so that is, you can see free here. Sign up, sign up. So that is that. Like I said, it's very flexible to use and all that. More flexible than Meta 4 and Meta 5. So it is when you sign up, it is free. You can see zero forever. That's what I'm using. I'm using the free version. I've not paid for it, but though I'm planning to take the first to take this one very soon, so that I will have more tools at my disposal. So when you are ready, and after registering, the next thing is for you to go over, to and start using it. Go over and start using it for your trading, okay, for your analyzing. Use it to analyze the market. Okay, so it gives you a broader view. It will always give you a broader view on how to use it when it comes to the market. Okay, so the moment you enter, you start using it. I mean, you start registering. It will bring it to a chart. Though the chart is not, it will bring it to a broader a place an interface. Okay, whereby you will now go in and take your analyze your chart further. Okay, it will bring you to a place like this. Okay, let me take us there. Okay, it will bring you to a place like this. Okay, after registering, then you will now get a kind of dashboard like this. Okay, so on that dashboard, you have the charts like this. Okay, though you might not be seeing this one until you come down to your right hand side, this place, and take any of the pairs here. Okay, you can take any of the pair here to register. Okay, you can pick up any of the, or I mean, pick up any of this pair here to analyze. You can see we have various pairs: Euro, USD. That is Euro against US dollar. The other one is GBP USD against there's British pounds against US dollar. The other one is British pounds against Japanese yen. So you need to know all these pairs. Please, at one time, you can always check it. Okay. Like I said, I'm using the free version. I don't have access to, so there are so many of them. So you can see here various markets. We have Forex, we have crypto, we have stocks here. You can see stocks, we have indices, and what have you. Okay, so if you want to start analyzing, you can always go and click on any of these charts. Okay, let me click on this one. Okay, when you click on this particular one, I click on British pounds against US and Japanese yen. So the next thing you click on full charts. Click on full charts. Okay, now take you to the full chart. Okay, take you to the full chart. Okay, it's opening. It's opening. So it will bring you to this area. Okay, to bring you to this area. Okay, it's opening. Okay, so this is where we are now. Now, if you want to analyze the market, this is how you come and analyze the market. You come to the charts. Okay, what you're seeing here, the green and the red, these are called the candles. Okay, the green represents the green candle, while the red represents the red candle. Okay, and this represents what you're seeing. The movement of this candle represents price action. It is called price action. Okay, and the whole of it is called market structure. All right, so now one of the best ways to analyze the market is price action. There are various tools you can use to analyze the market, but the one I think is the best, and from the way I was trained, okay, price action is the best. Okay, price action is the best. And when you're analyzing the market, we have two types. We have two ways to analyze the market. Okay, we have two ways to analyze the market. We have, let me quickly take us there. Like I said, we have two ways to analyze the market. We have what we call the technical analysis. We have what we call the technical analysis, and we have what we call this is the market structure, market analysis. That's what we have what we call the technical analysis, and we have what we call, okay, let me leave the second one till we get there. So this is what we're about to do is called technical analysis, and we are now analyzing the markets using the charts and candlesticks. Okay, I'm not using, if I'm going to use indicator, maybe one or two indicators, but when it comes to price action, the best tools to use is the chart and the candlesticks, and monitor the price and the movement of the candlesticks. So that's basically what we know as the price action. Okay, then the other one, you can use the indicator. Indicators can be maybe one or two indicators to use. Okay, so that's what we're going to use. But that's what we are going to that's what we're going to use and analyze the market. Now we are using technical analysis. The other one is fundamental. We'll get there very soon. Okay, so when you are analyzing the market, like I said earlier on, you need to be, you don't predict the market. Okay, you don't predict the market. What you do, you don't predict the market. You follow the trend of the market. Okay, you follow the trend of the market. You don't predict the market. All you do is just follow the trend. Okay, you just follow the trend. That's what known as, that's what they call the market structure. Okay, that's what we know as the market structure. You follow the trend. Now, before you start, okay, the first thing to do is to go over to the higher time frame. We have different types of time frame. Look at the top here. We have the different types of time frame. We are on 1 hour time frame anyway. So in any chart, the moment you open any chart, what is before you is a diagram, of course, and you are always on a time frame. Okay, just for you to check and know the time frame you are in. Okay, so when you click on trading view, when you click the top there, you can see these are the various time frames. You can see all of them. You can see times there, 30 minutes, 1 hour, what have you, 30 seconds, like that, 15 minutes, 10 minutes, 5 minutes, 1 hour, 2 hours, daily, weekly, monthly. So these are time frames. So the best way to analyze the market, the first time you just enter the market, you open any of the pairs, anywhere you want to, if it's gold and whatever, it's go to a higher time frame, maybe like a day. Okay, when you open a day, okay, so that's the first thing to do. You open a higher time frame, okay, to check the flow of the market, to check where it's heading to. You can see at the moment it's basically generally it's going down. It's just trying to pick up from here. It's going down as soon as we open this chart. So what we are seeing is a downtrend. Okay, it's just trying to pick up from here. So that's the first thing you first of all analyze first. So okay, then after then you now move over to maybe the 1 hour time frame. Okay, this is where you now have a broader view of the market. Okay, this is now where you have the broader view of the market. Okay, you can see what price is doing at the moment. Okay, you can see what price is doing at the moment. Now let me remove all this so that I will show us how we got to this place. Okay, so now let me remove all this. Okay, so now when you're analyzing the market, you have to draw your trend lines and all that. Remember, I told us that we use the chart and use the candlestick. This is the chart. These are the candlesticks, the red and the green. Okay, these are technical analysis, like I said earlier on. So you have to look at the market and see the flow. Remember, we checked it; it was going down. That down we saw, this is it here. That up we saw, there's two candlesticks we saw in a daytime frame. This is it. Okay, so now we know that it is going down and gradually picking up. Now this is 1 hour time frame. So look at the structure of the market. What is it saying? What is price saying? So price is either going up or going down. That is what price is basically doing. It's either going up or it's going down. Okay, so now that we are in the chart now, we look at that and see that okay, it is going. Look at where the market is moving. So what we do, we quickly draw our support and resistance zones, key levels. We call it key levels. We draw our key levels. Okay, the next thing to do is to draw your key levels. Okay, first and foremost, draw your key levels. Okay, so let me remove, don't pay attention to these ones. Let me just remove it in order not to get us confused. Okay, now first and foremost is to draw our key levels. Now first thing to do, I'll look at this and look at how it moves from here to up there. It shows that this place, there's a lot of buyers here. Okay, it shows there's a lot of buyers here. We can always come down here, pick up any tool, our rectangle tool. See, this is why I love this trading view. You can see it's very flexible for me to pick any tools and use. So I can come here and draw my tool here. This represents one of my key levels. We call it key levels. This place is called, this is my resistance zone. Okay, this is my support zone. Sorry, this is my support zone. Okay, I'm not going to draw the support zone. Now the price, can you imagine price went up from here down to this zone. Now you can see what price is doing. Price came back, is gradually going back to the test this zone. You see? So normally the moment you see this movement goes up here, you draw another key level here. Okay, you draw another key level here. So please let us watch those videos. There's a video on candlestick. Please watch it and you understand more of candlestick. You understand more of candlestick. So it went up back to this place and dropped down. So the reason why I drew this line, because it came down here. Price came down to this place. Okay, the moment price came down, touched this, it came down to this level. Okay, remember we just open this place. We just open this this pair, this Great British pounds against Japanese yen. We just opened this and we saw this. So the next thing, price got to this place. We saw that price got to this place and come down here, move and look at this area. That area, price is still not moving past in that area. So what you do, you draw this your line. Okay, you draw this line or a bar like this. Now look at what happened. Price still went back and touched that place. You see, it came down. Price when the price got to this place, came down, rallying down here, and moved back again. It consolidates again, came back and touches this place and moved down to this place. Okay, now price got to this place and what happened? Price went back up again. This place is, you mark this place. Okay, you take note of this place. You can see even when price came back, you can see price came down here, moved back to this place, touched this place and broke this line and went up, broke this structure. This is market structure here. This is a structure. So price broke this structure and went up, came down and started consolidating here. We retouch it again and came down back to this place. Now this place from here to here is our, you can call it support, your resistance support zone. This support, this up here, you can also call it your resistance zone. This place is resistance zone and this place is support zone. So it came up and touches this line, came back and touches it again and moved back up and touched this one. Now price is up here. You see, this thing is not magic. We are just following price action. I didn't mean we came earlier. I didn't mean we came here. As when we open this place, price is still somewhere around this area. We could have just entered for a sell. The moment it broke past this line, we enter for a sell here, a buy here, a buy here. Now, let's move back. We want to see why price stop here. Let's see if there is something that makes it to reverse back to this place. Let's see. That's why it is good for us to. You see, that's why 3DV is very good. You can go back and check history. You can go back and check history. Okay. In order not to waste our time, but that's how it's supposed to be. You go back and check history. Okay. We can even check down this place. Okay, not even, we don't even need to go far. I've seen a resistance zone here. You can see what happened here. Price moved down to this place. Started consolidating here. You can see this green, red, green, red, green. Started consolidating. The buyers came in here, wanted to push. Sellers came in and pushed down. Buyers, you can see they are just fighting here. And before you know it, it broke loose and started going down. So this place is one of our resistance zone. You can see it came down. It was consolidating at this angle. It came down. That's what came about this place. Price as it came down, came up, started going now, came down here and moved back to that position. You can see, move back to this position. You can see that position and started going down. So that is why at the we enter, we came early enough, open it early enough. Just anytime when you see something like this, you can see, look at this movement. Look at this movement. When you see something like this breakthrough and there was a move upward, you enter for a buy somewhere here and take it to this key level. You can see this is a key level because of this place. Take it to this key level. Of course, by the time you're taking your buy position, you're not seeing this price has not gotten to this place. But this place, by the time you look up this place, you see, when you see something like this, you know something is about to happen here. So what you do, you draw a line across. So you take profits here. The moment you take profits here, you hold on, watch price as it's going again. You can see price came back again, touches this zone, came down, go back again, touches this zone. Remember, by then you might have spotted this place. You draw your line. Then what you now do, you now wait for price. Now you can see he refused to break this line. The moment he came down here, take another big step, you enter for a sell here. You enter for a sell in this region. You enter for take a short position. Sell is a short position, call it a short position. You take it from here. You put your stop loss above or in between this key level or above it. okay, and take your, you can see your take profit around here. It's a sell position. You can see price went down and touches this zone. Isn't that cool enough? And touches this zone. That's very wonderful. So it started consolidating again, and what happened? The moment it got down to this zone, it came down here again, started moving on. The moment you see this, you enter for a buy position. Okay? Enter for a buy position and take it up to this place. That's how it is. It's very easy to I don't use the word predict now. We're not predicting, we are following the trend. We are following the movement. Look at it. The moment you draw all your resistance and key levels, all these lines, like I told us, is called resistance and called key levels, or call it key levels. The moment you spot your key levels and you plot them, it will be easy for you to monitor what price is doing. It will be easy for you, but at times it will not go your way. Please mind you, at times it will not go your way, but it's in almost all the occasions it will go your way. You can see it went up, down there, up and touches this line. Okay, so what we do, we just hold on. At this point, you hold on and see what next is going to do. Whether it's going to reverse or you're going to continue going up. Okay, when you continue going up and there's a sign it's still going up, you look for your next key level. Okay, let me reduce it. Okay, so when it broke past this place, let's assume it broke past this place. Okay, let me delete this. So if you broke past, now it is here now. If we broke past this place and give us a sign that is going up, what is the sign that is going up? I think that will be the next question. The sign, remember I told us that what we are doing is price action. Okay, we are doing technical analysis and we are using charts and candlestick, okay, to follow the price. Okay, and indicators, like I told you, I have not shown us any indicators here yet. I'm not using any indicator, you can see. But the indicators I like using is this one called Fibonacci. Look at it. Call it Fibonacci retracement. It's a very powerful tool. Look at the way it is. Look at the way it is. When you draw it, that's how it is. You draw it downward or you draw it upward. You can see downward or upward. They call it Fibonacci retracement tool. Very powerful. This tool you're seeing here. When it comes to that, I will show us how to use it. Let me quickly, if there's any situation, I will show us how to use it. This is an indicator. You can call it indicator. So another one is this one, this red and blue. Okay, call it a moving average. This red and blue. These are the two indicators I normally use. Okay. So apart from that, I hardly use other indicators. The next thing is the other ones I use, just you can see this drawing your demand and supply and all that. Okay, that's what I use. So Adibin is going to break past this place. Okay, and we saw if you're going to break past here, go to this place, you see any giant move, green candle giant move, like 2. When you see 2 giant move, you can enter for a buy. Okay, and this line, when this line remains like this, when this blue is still here at this junction, okay, it means that it's still going up. This blue represents green, while this red represents buy. So when this red crosses over, it means it's going down. Okay, when the blue crosses over, it means it's going up. Okay, so this is how. So when it moves, you can see it's still bringing up. We are in 1 hour. Don't forget, we are still in 1 hour. Okay, I will still take us down to 15 minutes. So you can see it's moving up. Now, sometimes for us to see what is happening here, we can move to the smaller time zone. Let's go to 15 minutes and see what is happening there. You can move to the smaller time zone. Okay, look at the smaller time zone, 15 minutes. It's still matching up. Okay, when it crosses, you see a very giant movement here, or you see a big candle, like I said, candlestick here, and this one still remain the same. You can cross over. You can enter for a buy, and when you enter for a buy, let me switch over back to 1 hour. When you enter for a buy, your stop loss, your take profit will be at the next key level. This is the next key level. You can see price came down here and started consolidating before it went down again. This is the next key level. So this is the next key level here. So the moment you enter for a buy, if you see any confirmation, like I told us, I don't use any other. So this is the next key level here. So the moment you enter for a buy here, somewhere around here, take profit here. Now, in the issue of taking profit, it doesn't really matter that the price must get to your take profit before you close your trade. You can close it anyway before you get there. But many times, as a trader, you need to be confident. Leave it till you get to your take profit. But if you're not comfortable enough, which means you'll be watching it every time, then you have to take your profit. You have to take it off by yourself. Okay, so that is how you trade. When you're taking your profit, set your profit at the next key level. That's how you trade. At the next key level. That's how you trade. Okay, so that's. Let's check the other timeline. Let's check another pair and see what is happening there. Okay, this is USD against Canadian dollar. USD against Canadian dollar. So you can see price is dancing here. Price is still dancing, consolidating. When price is consolidating, you don't trade. So what you do, you draw your key level. This place is a key level. You can extend this place. You can see, at least by now you understand what I mean by key levels. You can see this place, price came up here and went down. Okay. So price came up here and went down. You can see it start going sideways. When it got to this place is another key level. This place is another key level. Price came down here, you can see. It went back up, rally up, went back down to test this place. Okay, let me make it bolder, see what really happened there. Okay, so you can see price came down. So price came down. Also, there's another key level here. When price is sometimes you trade using you place your trade using you trade with resistance and support. Resistance and support. Like you see what is happening here now. This is resistance. This is support. Price came down, move up, came down, move up. You can see what it's doing. By the time price came down here, and you spot your resistance here, okay, when price came down here, there was nothing like this, so you don't know where is your resistance yet. But if you want to know, like I told us, you can always trace it backward and see what happened in this area, whether price has anything that happened in this area. So that's how you do it to spot the next key level. Okay, to make it easy for you, you can just do like this. Let me take it back to this place and show us what to do. Okay, you can just come down here. There's a line. Look at this two here. You click on this two. You take this one. I think it's this one. Take this one and put it down here. Okay, it's the other way around. Okay, you can see. You can see very straight. So you can now know whether there is any. You can see. Is there anyone there? Anything that shows that place a key level? So that's how you do. You check it, trace it down, take it down to make sure you can reduce. You can take another key another time frame to see, to make it much more easier for you. Okay, you can see what I just did now. Okay. Okay, so another thing to do is, let me take it back to 1 hour. Okay, we are there. Okay, let me take it back to 1 hour. Let me take it back to 1 hour. Okay, let me remove it. Let me remove it. Okay, so another thing to do is that when you go to this place, you can leave it. You can leave it. Okay, you might not do anything. You can leave it. You can leave it and allow you to go and watch what is happening. Okay, and with the moment it start dropping, you see it dropping. Okay, when you go to this place and you see it dropping, then you've not gotten that this place is a resistance. So, and you see at the third line here, you see a movement like you take your trade here, you take a sell position here, and take profit at this level. Okay, you take profit at this level. This is the price. Okay. Okay. So let me show us something. In case, let me explain something to us concerning taking a position. Some of us be wondering, how do you take your position when? Okay, let's assume this is where you enter for a sell somewhere here. Okay, you enter for a sell somewhere here. Take profit here. I mean your stop loss there, and your take a sell position here. Now you're wondering, this is how you take it. Now if you want to if you come down here, this is the line here. Look at this place. This is the line. Long represent buy, short represent sell. So you put it at the point, and where the price is at that time, then you click it will spread, and you now adjust. So now this is trading view. If you want, after you've seen an entry in here, and you want to take trade on your broker. So what you will do is that you will go to your broker. Okay, when you go to your broker, let me use BTC Dana as an example. You open it. Okay, you go to this pair. You go to this pair USD against US dollar. Okay, when you go to the pair, the moment you open it, you just click on buy. You click on sell. Once you click on sell, then it will bring out a place where you put your stop loss and take profit. So at where you're taking profit, where you're going to take profit, you can see where is the take profit here. You can look at your far right. It's 1.37246. That's your take profit. Okay, that's your take profit here. Now your stop loss is 1.37633. That's your stop loss. So you just press those figures there. That's all, and click OK. You're on. That's how to take. But if your broker is connected to trading view, you can take just as I've done it now, you just link your trading view with your broker, and you can just take your trade here instead of going to your app. Just from here, you take your trade. Okay, and it will automatically appear on your broker's account. Just the way it works with Meta 4 and Meta 5 too. If your broker is connected to any of them, you just take a trade in Meta 5. You don't need to go to your broker, take a trade, and it will appear live. So that's how it is. I've done a video on BTC Dana and how to take a trade. So watch it later on. So that's how to use it. So you can see take profit here, and by the time you see it going up again, it's moving up. You saw this and came down again. You move it and you saw this movement. You enter for a buy, but you can see enter for a buy here if you want to take the risk. Not taking risk this time around. Now you can enter for a buy here because of this movement. Okay, and it's very sure that it's not going down again. Take it from here to this place. You can see it got to this place. Now it's going down. So this thing is called, if you're trading like this, it's called using trading resistance and supply. Like trading resistance and support and resistance. Okay, you can see that is what is happening here. That is what is happening here. So it's most likely it's coming down to touch this zone again. It can be going up and down. Okay, so that is that about here. Okay, so let me see if I can see any movement so that I can be able to show us how to use that Fibonacci retracement. There's no movement here. Because there must be a movement, a particular movement before you use it. Yes, you don't just use it. There must be a particular movement before you use that Fibonacci. Okay, if I see it, I will, because it's a very powerful, I need to show us because it's a very powerful tool. Let me see. Okay, I will see if I've used it in the time past. I will show us how it works. See, okay, as we go on, let me see whether I've used it. Okay, I don't, this video is getting too long. It's getting too long. Okay, so let me see the next pair. Let's see the next pair. The next pair is USD against Swiss franc. Okay, let me use this one as an example. I think I've seen something that is similar. Okay, let me use this as an example. Let me go to 15 minutes time frame. Okay, let me use this. Now look at this. I want to teach us how to use this tool. This Fibonacci retracement. It's a very powerful tool. Now look at this movement here. Look at this movement here. Look at this movement here. Okay. Now, when price is in the middle of nowhere, okay, when price is in the middle of nowhere, let's see if it's to go. Okay, so okay, sorry about that. So when price, look at this movement here. So when price is in the middle of nowhere, had it been this green, this side is not there. Let's assume this portion is not there. Let's assume this portion is not there. This portion. Let's just pretend as if all these are not there. It's only this from here to this place. Okay. This place is not there. What is there is just here and here. Now, the moment you saw this movement, from say a big movement like this, and price started going down, you don't know where it's going to. Okay, you don't know where it's going to. So what you will do, okay, and I guess that's what happened here. What you will do, you just come down to, when you see this movement 1, 1, 2 here, you just come down here. Okay, you take this 2. Okay, when it is going up, when it is down like this, you select this 2. Okay, when it is down like this, you come down to this. Let me bold it. Okay, you come down to this last one. You put your cursor here to this last one. After clicking on this thing, after selecting it here, okay, you take it from this last point, because you always take it from the last point where it started moving up. Okay, you take it from the last point and you click and you drag it. Okay, there's a black line there. There's a black line here. Okay, you put it there. The highest point, you take the black line to the highest point. You take the black line to the highest point. Okay, that's the highest point. You drop it. So this is the highest point. Okay, from the lowest point to the highest point. Now, what is the idea here? Now, when you see something like this, price started dropping, you don't know where it's going to. You will draw yourself Fibonacci retracement tool. Okay, what you wait for the price to drop to this zone. We have 38.2, 50, and 61. Okay, probably 79, 78. So you allow price to go down and touches any of these points. Okay, the more price touches any of these points, at this case, price touches this 50 mark here. So the more it touches this 50 mark, what happened? It started going up. Okay, it started what? Going up. Now, when it started going up, okay, and there's movement, shows that it's going up. Your first take profit is this black line. Your first take profit is this black line. You trace it. What is the price there? Price is, cut it on your far right, 0.85924. That is your first take profit. Okay, and when you see it and the price is still moving faster, put your second take profit will be somewhere, the second red line, the first red line. That is your, you can see what happened in this case. Price started, the moment price touched this line, you can see how powerful it is. The moment price touches this line, it started going up. There must be confirmation, like I told us. There must always be confirmation. Don't just enter. You can see this green line. Look at this blue line, it's already over. You can see this blue line has already changed pattern. Okay, it has already crossed over. Even from here, it has crossed over. You can see. So you, with the moment you touch this line, you form this big giant movement. You enter for a buy here. It will get to this point. Not only this point, you can see it started moving up. It got to the second one. Could even go to the last one. You see how powerful it is. That's how powerful this tool is. This Fibonacci retracement. This is retracement. Okay. The moment you got to this, that's the whole idea. You must get to this place. But when it started dropping, especially when it got off to this place, then it is no more retracement. It is no more retracement. Okay. It's purely that price is purely going down. It's no more retracement. Retracement means that price is going to reverse. Okay, that's the meaning of retracement. So the moment you see it, it touches this place and waits and confirm that it's going to reverse. The moment there's a confirmation is reversing, you enter for a buy position and you can see what happened. It got to the last one. Just imagine you take a trade from here to this place. That's the key, especially when you're doing it in gold or any big this thing. You can see how powerful it is. So the same way when it is downward, okay, when it's the other way around, if I can see it, I will show us. If I can see it, oh, this video is getting too long. If I can see it, I will show us again. So you can see that's how powerful it is. Okay. So let's okay, that's that. So we understand it. So let me delete it. You can see, let's go back to what we're doing. You can see, don't forget, it's a very powerful tool. Put that at the back of your mind. Look at this one. Look at this one, USD. You can see price. Let's take it from, okay, let's see from here. Price going up, down, up, down, up, down. Now it means price is going what? Its price is on an uptrend here. It came down here. Okay. It broke this level. It didn't go far. It broke this level here. It did not go far. It came down. Started consolidating. And from here, it went back up. Now price, there is a, from the look of things here, you can see there is a demand zone here. There is a supply zone here. So price is going to hit this supply zone. Price is going to hit this zone. You can see it's even going towards it. So the moment price got to this place, it's likely it's going down. It's coming down to this zone. It's likely it's coming down to this zone. So this is how I trade. There's so many to it. I'm just using what I'm seeing here at the moment. So that's why I want to appeal to us. Please watch that video. There's so many, a lot of patterns. I mean, not patterns this time around. A lot of you know, a lot of points, a lot of you know, points in the charts. This is the one I just saw now. That's why I'm dishing it out. But in that video, there's so many one that was elaborated. So we must watch out too. Okay. So that is that. When it's good, like I told us, when it's going down in that Fibonacci, when it's the other way around, you do it the same way. You see the same pattern, but this time around, remember, we drew it from down to up to the last point. This time around, you can do it from up to down to the last point. Okay, so that's when price is coming up and you don't know where it's going to. When you see that movement, 3 steps, just as we 2 steps, you take out your Fibonacci retracement tool. So in this period, you can see this is where price is now. Price is going, it has broken this zone. it has broken this, place. So it's most likely price will come back and touch this. It's most likely price is coming back to touch this place, this line here, and go back up. Okay, so that's about that. So see you in the part 2 of the video. Thank you.